The electric vehicle market is expected to grow at a rate of 24.3% annually from 2021 to 2028. It is anticipated to reach $1.3 trillion in 2028. According to the Climate Action Tracker report, to control global warming, at least 75% to 95% of auto sales should be EVs by 2030. Comparatively, only 5% of US vehicle sales were EVs as of mid-2022. And in this massive potential holding market, Tesla Incorporated is the undoubted leader with roughly 70% market share in 2021. With the increased focus on climate change and fast-paced EV adoption, many new startups as well as legacy automakers are bringing EVs to the market. Tesla's market share is expected to fall as new leaders mark their space with the increasing competition. Thus, here we have listed the 5 best EV stocks that could become the next Tesla, and take over the market in the days to come. The first stock on our list for today is Chinese EV maker Nio Inc, which trades under the ticker symbol, NIO. In addition to electric vehicles, the company also provides many other services like Power Express valet service, battery swapping, mobile charging truck solutions, etc. It also offers other value-added services like vehicle financing and license plate registration. Moreover, Nio is even working on bringing EV battery production in-house, and recently purchased a stake in Australia-based lithium company, Greenwing Resources. The EV maker's revenue and deliveries growth have been exceptional, with 10,059 deliveries in October 2022. This marks a massive increase of 174.3% year-over-year, while the year-to-date deliveries have surged by 32%, despite operational challenges and supply chain hurdles in China. Nio is a comparatively new company whose existence was periled just a couple of years ago. However, in the second quarter of 2022, the company posted an increase of 21% in sales, while the cash and equivalents were over $8 billion at the end of June. The results were much better in the face of tremendous challenges in the market. Furthermore, the company is also ramping up its global expansion plan with Germany, Netherlands, Denmark, and Sweden after its successful entry into the Norwegian market. The new expansion plan includes both leasing programs and direct sales to users in European countries. Out of 27 analysts following the stock, only 2 have a hold rating for it, while all the rest mark it as a strong buy and buy. Thus, NIO is a great EV stock with strong future prospects despite short-term headwinds. Coming next is another Chinese EV maker, Li Auto Incorporated, represented by the ticker symbol, LI. The company develops premium electric SUV energy vehicles, and boasts a lineup of high-end luxury SUV models. Like all EV makers, Li Auto has also been suffering from supply chain disruptions and China's extreme COVID policy. The company delivered 10,052 vehicles in October 2022, with an increase of 31.4% year-over-year. However, the underlying EV demand remains strong as the company's second quarter sales surged by a nice 73% at $1.27 billion. Moreover, its 2 new EVs L8 and L9 are ramping up orders, with deliveries for L9 set to commence this month. The new products and ramped-up production is expected to accelerate Li Auto's 2022 revenues. Analysts anticipate the company to start generating profits by 2023 if not this year. Its near-term profitability and a more cautious approach to Europe expansion are 2 points setting it apart from its peers. The company is looking for partnerships in Europe, instead of trying to penetrate the market on its own. In addition to a buy rating from most analysts, the stock has an average price target of $44.44, which represents a huge upside against its current $16. Thus, LI is another great EV stock, showing promise for becoming a dominant EV name like Tesla in the days to come. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. The next stock on our list is the US multinational legacy automaker, General Motors Company, which goes by the ticker symbol, GM. This largest automaker in the US, is making a big push into the EV sector and is quickly growing its market share. Doubling down on its EV strategy, it is targeting a 1 million EV capacity in North America as soon as 2025. As per the latest quarterly report, the company captured over 8% of USF sales in the 3 months. Its Chevrolet brand remained the second most successful EV seller in the quarter, next only to Tesla. Thus, General Motors intends to produce 70,000 units of its highly demanded Bolt EV and Bolt EUV in 2023 against this year's 44,000. It also plans to introduce higher value EVs to the mix. Moreover, the company's financial growth is also very promising. The top line in the third quarter improved by a nice 56% to $41.9 billion, while the bottom line surged by 48% to $2.25 per share. Free cash flow was also very impressive at $4.6 billion in the quarter. General Motors plans to double its revenue by 2030, to somewhere between $275 billion and $315 billion. On top of its financial growth and strong EV momentum, the stock has a price target of $58 to $59, which implies a good upside from its current price of $38. Coming next is another American multinational vehicle manufacturer, now trying to recreate itself for a zero-emission and all-electric future, Ford Motor Company. Trading under the ticker F, this legacy automaker plans to spend $50 billion on EV models through 2026. It expects to manufacture roughly 2 million EVs annually by that time. The automotive giant is thus currently going through some restructuring to fully embark on this plan. In October 2022, the company sold 6,261 EVs, which surged by 120% year-over-year. However, the supply chain snarls and inflation continue to be a headwind, as is for all EV makers. Thus its third quarter earnings declined 41%, while revenue rebounded by 10% to $39.4 billion. The major shock to the earnings came from Ford's investment in Argo AI self-driving startup, which is shutting down. The company thinks it's too early for fully autonomous vehicles. But despite this, the earnings and revenue were still better than expected. For the full year, Ford expects adjusted EBIT to improve by 15% against 2021. The free cash flow is anticipated to surge to $9.50 to $10 billion. Wall Street expects the company's 2022 earnings per share to improve by 24%. Moreover, in the recent quarterly report, the auto giant reinstated its dividends, while they had been cut off for 2 quarters due to the impacts of the pandemic. Thus, its current dividend payout is 15 cents per share with a yield of 4.52%. Ford is another great EV stock in the process of becoming a giant in the sector. The final stock on our list for today is one of the hottest initial public offerings of 2021, Rivian Automotive Inc. Trading under the ticker symbol, RIVN, this American EV maker is still in its startup phase, with production just picking up its pace. The company makes sporty electric pickup trucks and SUVs with distinctive style, clever storage, and muscular power. It also continues on improving the existing EVs through over-the-air software updates. Rivian produced only 7,363 EVs in the third quarter of 2022, at its production facility in Normal, Illinois, representing a 67% increase over the second quarter. However, production is picking up pace as supply chain bottlenecks ease out, and the company remains on track to achieve its 2022 target of 25,000 vehicles. Moreover, to ramp up future production, it is building a 400,000 vehicles capacity factory in Georgia, on top of the 150,000 unit capacity normal facility. While its production is not optimal, the company does have enough capital on its balance sheet to build over 500,000 units and has no debt. Furthermore, it posted sales of $364 million in the second quarter, against zero in the comparable period. While the short-term outlook is not impressive, Rivian is still a viable company with a solid future. It holds a buy rating from Bank of America, and a price target of $70 against its current $32. That's all from us today. We hope that the insight we aspired to give you will prove helpful in optimizing your investment strategy. We would love to hear your feedback on our list in the comments below. If you would like to know more about different stocks and the numerous investment strategies they are fit for, check out our website, stockstelegraph.com.